Good day, everyone. I would like to welcome you all to our ESG webinar, Why You Should Treat Your Sustainability Data Like Your Financial Data. My name is Peter Magnussen. I am an ESG solution expert at Impero, and today I'm joined by Henrik Jørgensen, partner at KPMG for their ESG advisory services. Henrik and I have been working together since Henrik took over the business unit at the start of this year for what have so far been a very exciting cooperation where we have had a lot of changes and iterations to CSRD and also for a very much evolving ESG landscape. Now we're nearing the first halfway point for CSRD reporting. So today we are going to have a conversation regarding what we have learned from the past year, sharing our experiences for what will be an interesting discussion here today. But first of all, a quick introduction into what is Impero. Impero is a compliance management platform that are trusted by more than 160 companies worldwide. Impero are mainly within the financial and tax compliance space, but as we have seen a lot of changes in the requirements for ESG data, we're also moving more into ESG together with our customers. So as from a technical perspective, how you work with processes and the focus for how you're actually going to work with your ESG data has become much more apparent than what it has been from the past last years. And therefore, the lessons that we have learned so far are highly relevant. The purpose of today's conversation is to share our lessons learned and provide some inspiration for how you can start working with your sustainability data as your financial data, regardless of company size and complexities. And we will also be able to have a lot of your questions and answer those questions later on in this conversation. So to dive deeper into the overall topic of today, we're going to hear from Henrik, who will share his expertise in integrating ESG into finance.
Thank you, Peter. Just a brief introduction to me so you know who I am. My name is Henrik. I am a partner with ESG Advisory Services here in Denmark, which I have been for, I guess, 4 months now. Before that, I have worked as a consultant, primarily in financial reporting, helping clients optimize financial processes, working with internal controls, that sort of thing. And in my previous life, I was an auditor way back in the day. Fortunately, got out of that. So today, helping clients with optimizing processes, and for the last 4 or 5 months, specifically within the ESG area. The reason I went into ESG is I think it is the most important thing to happen to our profession pretty much ever. I think we are looking at a completely new way of working with data. We'll get back to that. The purpose of the presentation I'm going to give today is essentially to give you an overview of, just a brief overview of what CSRD is and how it will affect Danish companies. We will also be talking a little bit about how it ties into your corporate strategy and how it ties very much into financial reporting. And we'll be discussing how sustainability reporting and financial reporting will have to be aligned and cannot be sort of pointing in different directions. They have to be, like I said, aligned. We'll be talking about how CSRD will influence processes and internal controls, and how you need to build processes and internal controls around your CSRD reporting. And we'll go briefly and just touch upon how auditors look at CSRD, which is something that's still evolving, as we're seeing the first CSRD reports obviously will be issued by the end of the year. But so we have yet to see audit reports, but obviously it's an ongoing discussion between the auditors and the clients. Right, so CSRD in a nutshell, how CSRD links to strategy and how it links to financial reporting and audit requirements. And then we can have some questions if there are any. So CSRD, the Corporate Sustainability Reporting Directive, is a directive that was passed by the EU. As EU legislation or directives have to be adopted by member states to be turned into legislation. That is being done as we speak. The Danish Parliament passed the relevant legislation recently, I think last week or the week before. So it is now Danish law. Fundamentally, I think it's important to understand that the CSRD is a new way of looking at companies and how companies interact with the rest of the world. Whereas we have in the past talked about shareholder value, and then we moved into stakeholder value, where companies were accountable to their shareholders and to employees and to government agencies. We're now seeing legislators in the EU taking a much broader view, expecting companies to be accountable to the entire society of which they are a part. And that is the fundamental shift that the CSRD implies. CSRD is one component of what is a larger sort of green plan, which also includes the EU taxonomy, which you may have heard of. Just briefly on that, the EU taxonomy is a system that sort of classifies economic activity and tries to determine which activities are green. And the idea being that investments can be directed towards green activities and thus support the net zero trajectory which the EU is on, which it should be on by 2050. But the CSRD, as I said, is part of this. It describes the requirements for companies to report. It says, and we'll get back to that, it talks about which companies need to report. And it's supported by what is called the ESRSs, essentially the sustainability version of the IFRSs. So reporting standards that go more into detail about what should be reported and in which way and how you should present your findings. So the idea is to provide investors and other stakeholders and the rest of society with information about how a company affects the society around it, so the environment, the people around it, but also how the society affects the company back. And we'll get more into that. Just a few acronyms. There are lots when you're talking about this. CSRD, like I said, is the Corporate Social Responsibility Directive, and ESG obviously is the sort of underlying paper that we're working from. Here stands for environment, social, and governance, and it sort of provides the area within which we play when we're reporting on CSRD. Lots of acronyms, but these I think are the two most important. One important fact, the CSRD obviously is EU legislation. It doesn't affect only EU-based companies. It affects all companies and groups that have significant activities in Europe. But we'll not get into too much details of that, but just know that if any company or group that has significant activities in an EU country will be affected. So the CSRD replaces what was known as the NFRD, the Non-Financial Reporting Directive. It is a completely changed environment compared to the NFRD. The requirements are much stricter, much more elaborate, and much more expansive. The sustainability report, the CSRD report, will be a part of the annual report as part of the management review. As such, it will be subject to audit. We will get back to that, but just so you understand, the first 3 years will be the auditors will be requiring limited assurance. In 3 years, I think it's from 2028, it will change to what is called reasonable assurance, which is the same level of assurance that auditors require for financial data. So we have 3 years where requirements are going to be a little less strict from the auditors, but in 3 years, it will be a completely normal audit we'll be looking at. That presents significant challenges in terms of your data collection and in terms of building processes and internal controls around data on sustainability issues, which is obviously sort of one of the main points of today's presentation. Is this is why you have to treat your ESG data, your CSRD data, like your financial data, because at the end you will be required to will be subject to the same scrutiny from auditors that your financial data is. The ESRSs, the reporting standards that are supporting the CSRDs, there are going to be 12 sustainability reporting standards. We're not going to go into detail. There are two sort of general standards that it might be a good thing to just sort of briefly read through if you have the time. The ESRS 1, which outlines the general requirements for reporting under CSRD, and ESRS 2, which talks about disclosures, what has to be disclosed. And then a number of industry standards will be issued at a later date. Not going into the details of that today. So in Denmark, we obviously are affected by this, since the Danish Parliament has now passed CSRD into Danish law. Approximately 2,300 Danish entities are affected by this. The Danish business authorities estimated the costs of becoming first-time compliant for these 2,300 companies at 10 billion Danish crowns. This obviously means both internal costs, probably also extra audit costs, as well as consultants. But this is just to say that this is no mean feat. This is going to be a tremendous exercise that Danish companies are going to have to go through to be compliant. One important notice, there is the possibility of a group exemption. What this means is that if a Danish company is a part of a larger group and has a parent company that issues a CSRD report, the Danish company does not have to provide its own, provided that the report issued by the parent company covers in all the material aspects that are important to the Danish company. So if your company is planning to use the group exemption, I think it's important that you understand and you read through the reporting that your parent company is going to be issuing, because if there are significant or material areas that are important to your company that are not covered, then you probably have to do something in terms of reporting locally. So who's affected? All large companies with more than 250 employees and or 50 million euros in turnover and or 25 million euros in total assets. When two of these criteria are met, then your company is affected by the CSRD. If your company is listed, it is affected regardless of size. There's a timing issue here. Larger listed companies are affected before smaller ones, but if your company is listed or has listed securities, it is affected regardless of its size. The key concept of the CSRD, which we will return to, is the double materiality assessment, the DMA. Most of you have probably heard about this, but this is the concept of around which CSRD reporting revolves. The CSRD introduces, and you've probably heard this as well, the 1,100 or more than 1,100 data points scattered across 12 standards and 34 subtopics and 70 subtopics. Do you have to report on them all? No, you probably should not be reporting on them all, because as they say, if everything is important, nothing is important. And part of the DMA, the double materiality assessment that you have to go through, is to determine what is important to your company.
And also as well, especially in this case, this is the minimum sustainability matters that you need to go through as a company. You might have a lot that are specific for your company, then you need to actually take into account these sustainability matters and underlie the exact same process as you would all of these other topics from all the standards. So you need to have your process, of course, completely in place and then follow that along all the way, because the process here is going to be the important part. But also identifying all of these IROs, another acronym standing for impact, risk, and opportunities, is what you also need to look into when doing it specifically for your company. So it is more than this, since CSRD states this is the minimum, but you also need to take into account your own context.
Exactly. And this, I think, goes back to the point that the CSRD, what it is doing is it is asking companies to disclose how they affect society around them in general. So you have to go through a process of that, and also how the world around them affects the company back. So that could be, for example, how temperature rising might increase your company costs, how it might be a risk to your company's operations, for example. If you determine that, you're going to actually have to come up with how it could affect your company financially, and the extent to which your company could be affected. So again, the important concept here is you have to think about how your company is affecting the rest of the world doing its operations, and how it's affected back. We talked about the limited assurance. So you will be subject to or your report will be subject to audit. Limited assurance first, later reasonable assurance. I think what is important, again, we'll get back to it, but I think what is important, and you talked about it as well, is the process here. I think when auditors arrive to look at and to audit your CSRD report, what they will be interested in is how you did it. They will be interested in the process you went through. So make sure that that process is documented. How did you arrive at your conclusions? Are you just reporting on whatever you can report on the data that you could actually access? Mm-hmm. Or did you go through a proper process of identifying material issues? And then from that, go on to identify relevant KPIs and then gather the data. I think they're very much going to be looking at that initially. It is important to say, I think, at this stage, that we are still, I said it before, but we are still at a point in time where no CSRD reports have been issued and where no audit reports have been issued. Important to understand. So we are still sort of building the plane, but I think we can say still with a certain degree of certainty that auditors will be very interested in the process that your company has been going through, because that is how they sort of understand how you've been arriving at what is material to you. So a little bit about the timeline. For this year, FY24, what we call large pies, so public interest entities, listed companies, government-owned companies with more than 500 employees all have to report for this year, this financial year, meaning the annual reports that are being issued at the beginning of 2025. So are these companies then just sitting back and waiting until the end of 2024 to collect some data? No, they're not, because obviously data collection has to be going on now, because you're reporting for the entire year. So you need to understand what is important. You need to begin collecting data. And the companies that we were talking to certainly are doing that. They're certainly very busy. I think some of them are collecting data while they're also finalizing their DMAs, in fairness. I think that is understandable. But as I said, large pies have to report by this year. Other large companies in the Danish sort of taxonomy, we'd be talking about reporting class C. The large reporting class C companies will be reporting next year. So for 2025, meaning annual reports issued early 2026. And then we have smaller listed companies. So listed companies with less than 500 employees will be reporting by for the reporting year of 2026, meaning reports issued in 2027. And then we're followed by non-EU parents and other things. I'm not going to go into details. I think these are the three most important groups. So large pies this year, large non-pies or large C reporting class companies next year, small pies 2026. So what are they doing? What do they have to do? Well, they have to go through, or we have developed it into 6 phases here. I guess you could divide it in other ways, but first of all, they have to go through the double materiality. I'll get back to that in just a second. But that is determining what is material. What do you need to disclose? Second is performing a gap analysis Are we ready to disclose this? Do we actually have the data? Do we know where the data is? I can tell you we don't. We will probably be able to find some of the data, but one of the, I think, recurring themes that we are having discussions with our clients about is that, in contrast to financial data, the data that you need to compile in order to do CSRD reporting is much less structured, if it exists at all. Sometimes there is no data. There might be some knowledge, but there is no data as such. Sometimes there is data, but it's semi-structured or unstructured. It's you find it in many different systems, in many different formats. This is going to be an enormous challenge going forward. So the gap analysis, I think, is very important, is assessing, okay, we've determined in the DMA what's important, what is material, how can we actually gather the data, what do we need to do?
And actually as well, when looking into our gap analysis here, we also know that for everything relating to policies, actions, and targets, if, for example, we don't already have an action plan, we don't have a plan or a transition plan for our targets and the policies, well, then we actually, for at least a lot of the companies, they don't have to create it. But if you already have it, then you need to make sure that your existing policies are going to be CSRD aligned. And this is also where, for example, from ESRS to the Appendix E from the directive, there is a flowchart where that can help just a little bit to show what it is that you need to do when coming across, especially for policies, action, and targets, since when we're talking about KPIs and also metrics, it have an entire flow for itself, where you also need to, for each data point, if you have deemed the sustainability matter material, need to go down and say, for all the data points, are this material as well. So that's why that within this gap analysis, it can be quite complex, quite time consuming, and that's why it's good to get started as fast as possible.
Yes, I very much agree. I think it's important to say that this is a reporting exercise to begin with. This doesn't require you to save the world, so to speak, but it does require you to understand as a company what is material, how do we affect the world in a material way, how does it affect us back, what do we need to report on, and where are we not capable of reporting at this moment, and how do we get to where we can report on all the things that are material, because that's the third phase, is setting up the reporting process, outlining how you're going to do it, what are the reporting principles. Just like you would with financial data, just like you need the sort of the same manuals, the same underlying policies describing how are you going to deal with this. Then fourth phase would be drawing up an implementation plan, planning and prioritizing which gaps are you going to be closing, how are you going to do it, how long is it going to take, what are the costs associated with it. This is where the Danish authorities expect you guys to be spending 10 billion crowns collectively over the next year or two. Then we move into the implementation phase, where you execute the plan to bridge the gaps, and then you're ready to report and to receive your auditors for a hopefully nice and conjugal visit. So the concept of double materiality, I think, is probably the key concept in this. Not probably, it is the key concept in the CSRD. It requires you to take two views. It requires you to take an inside-out view. How is your company affected by the rest of the world, by what's going on around you? And it also requires you an outside in. How does your company affect the rest of the world? This also means that we have two sort of scales of materiality. Those of you who are used to working with financial reporting are probably used to the concept of financial materiality, where you sit down and calculate what is material to your financial report based on your EBITDA or your revenue or assets, or depending on the type of business. This materiality concept, or these two materiality concepts here, are slightly different, because the first, the impact on you, on your company, is mainly still financial, but it's not a financial reporting materiality. It's an impact materiality. So this is how could things going on around the company in the world affect the company in a material way. So when you're thinking about materiality, just remember there's a difference between reporting materiality, what's important. This is what is important to the company and to its operations. And then there's the impact that the company has on society and the environment. So how does it affect people and the environment? And obviously here we're moving away from a financial perspective, and this makes materiality much more difficult. So say, for example, that you have decided that gender equality is important and that you need to report on how many, for example, women you have in boards of directors in group companies. What is the materiality? How many persons can you go wrong, so to speak, when you're providing a number of women in your with the seats on your board? It's hard to say. It's probably low, but anyways, I think this should show you that the sort of materiality concept is fundamentally different when we're talking about CSRD reporting than compared to financial reporting. But the issue is here, you have to sit down and you have to figure out what is material, how does the company materially affect the world around it, and vice versa. The process at least can be drawn up into 5 steps. You define materiality, you analyze the company context, and you identify material stakeholders. So essentially understanding the context in which your company operates and how it materially affects the world around it. Then you sit down and you identify the IROs, the potential and existing impact, potential risks, and also opportunities that are created from an impact perspective. So how do we affect the world around us, but also from a financial perspective. So that's the second step. The third step, you perform an initial assessment of topics. So you have identified the material topics that you need to report on. And then now you have sort of formed a hypothesis, a theory of what is important. You have to engage with stakeholders to ensure that your findings are valid, that you have left out nothing important. So this is not just a desktop exercise. You actually have to engage, identify with, and engage with your material stakeholders as a company. And then you document the results and you process. And now you have gone through the DMA and you've identified what are the material topics that you need to report on.
A fun fact, if you can say so as well, for when looking into the stakeholders, as what we usually know as stakeholders is our business partners, it can be our suppliers, but there's also one thing in CSRD that are very interesting, and that's the concept of silent stakeholders. Silent stakeholders in this part is actually nature. So we need to look into how do we actually affect nature, but we can't just ask nature, are we going to damage you by doing this activity? And that is where it also gets a tad more complicated, especially to actually gain some insights from these silent stakeholders to incorporate into our double materiality assessment. An example of, for example, a company that has done this successfully so far is, for example, Arla. Arla incorporated silent stakeholders into their sustainability report from this year, where they also started looking into, with all the concepts of double materiality, to actually already now lay the foundation for when it is that they need to report. So it's also to address that this is something you need to preferably start early, and you need to try it. You need to then bring your findings, because this is a process that's also going to be iterative, since it's a continuing exercise and not a one-off.
Yeah, I think that's very important to state. You're doing this for the first year you're reporting, but it has to be continually updated. Yeah. So as the world around you changes, as the business environment changes, as your business changes, you'll have to update your DMA on an annual basis. And obviously, we all know that the only constant today is change. So this is going to require an annual process. Okay, so how does this link to strategy, and how does it link to financial reporting? Well, I think I think I alluded to it a little earlier, but it is critical to say that you cannot have a business strategy that goes this way and a sustainability strategy that goes a different way. You cannot have financial reporting that says one thing and sustainability reporting that says another thing. I'll get back to an example in just a second to show how this applies. But again, it's important to understand that the CSRD reporting is a part of the annual report. So you cannot have, obviously, different elements of the same annual report telling a different story about the same reality. We need to ensure that there is a coherence between the various elements and that the CSRD report, rather than go against your financial reporting, actually plays together with it and supports it. And that the strategy that you present in the financial report for the company and for the overall sort of business of the company, but ties in with the strategy that you present for the sustainability area. Yeah, so just to show this is an important thing, and I think is if there are two things you take away from this presentation, this should be one of them. Make sure that your financial statements, your strategy, and the sustainability part of the financial statements are correlated and that they tie in. Very important point. Just an example, and actually one that we found in an annual report. I'm not going to name any names here, but it was an airline that we're now calling APC Airways, which has a fairly young fleet of planes, and they were presented in their annual report. It's their sustainability strategy, and their plan was to reduce carbon emissions by 75%. Elsewhere, they outlined their plan to grow their top line by 10% each year. And while the two may not be completely mutually exclusive, at least as the reader of the annual report, you're left wondering, how are they going to do this? How does this affect the value of the fleet of planes they already have? Do they need to make significant investments? Do they need to completely change it? This needs to be addressed, at least, because as a reader, you would think, okay, you have to reduce carbon emissions. You probably can't do that with the existing planes flying on the existing fuel. You probably have to do something about that. What does that mean? And what does that say about the value of your assets? Are the two strategies actually mutually exclusive, or can you actually do both? Perhaps you can, but you'll need to explain. And when your auditors read through your financial reporting, if they find examples like that, I would expect them to ask questions. When stakeholders read your annual report, they would expect to find answers to these questions. So just something to think about. It has to integrate. What this means also is that sustainability reporting, being a part of the annual report, has to live up to the same requirements, the same quality of process that financial data has to live up to. This means you need to engage with your people. They need to understand the requirements that they're supporting. I think perhaps to a maybe even greater extent than financial data, when you're collecting this data, you're going to need to interact and engage with the business. You're going to need to understand how the business operates, perhaps even more. You're going to need the organization to deliver information and data. Some of it is anecdotal, some of it is not in ERP systems or other systems. This presents an enormous challenge. You have to set up processes. You have to be able to document that the process of collecting the data ensured that your data is not biased, that you did not end up with a result that you wanted, or you ended up with a wrong result because you just reported what you could find. What happens then if you can't get data? Well, report that. Report that you tried. Report that what you're doing to bridge the gap to be able to report on the data in the future. But critical, you need to be able to collect the data. And actually, the CSRD specifically requires, and this is actually unusual, the CSRD specifically requires companies to have internal controls in place for collection and presentation of CSRD data. It's a specific requirement. And this brings me to my other main point of today. And this is that sort of the other takeaway that I would urge you to take with you from this presentation. Since you need to have internal controls, the only way you can have the right internal controls is if you understand your risks. The only way you understand your risks is if you understand your process. And I would say the only way you understand your process is if it's documented. So having a repository, having an understanding of the process, how did you gather the data? Where did you find it? Which parts of the organization were involved? How did you ensure that the data is not biased and that it's complete? Understanding that process, then sitting down, asking yourself, what can go wrong in this process? How can we miss some data? How can we miscalculate? What can go wrong? Understand the risks, and then set up the controls that either prevent things from going wrong, that's what we prefer, or at least detect that something went wrong afterwards. So I think that is the other key point of today, is understand your process, make sure your process is structured and documented, understand the risks in the process, and then design the internal controls, just like you would with financial data. Right. Final note on audits. I think we have pretty much covered it throughout the presentation. Your CSRD report is subject to audit. We are talking limited assurance. Not going into details, but it means that the auditors will be looking at the process of, will be asking questions, and it will be interviews, that sort of thing. And by 2028, we're talking reasonable assurance. So it'll be the same as with normal financial data, which means normal audits, samples, looking into process, testing controls, that sort of thing. So that's what we're moving towards. But it means that you have to start building the audit trail, so that when you're presenting something in the annual report, there needs to be an audit trail so the auditors can actually verify the data. This is going to be specifically tricky with qualitative data. When you're writing text, narratives, think about how you write. It has to be extremely precise. If you're saying something happens often, what does that mean? Periodically, what does that mean? Can you actually substantiate that something happened, that you're doing something every quarter or whatever? Think about that. It's going to be a challenge. I think with that, I will pass the ball over to you, Peter.
Yes. Thank you very much for the presentation, Henrik. I think it was very interesting to hear about how all the considerations that we actually need to do for CSRD, because we do know that a lot of companies have already started, but also the point about you are sort of building the road as you go, so you can both look into how to do your double materiality assessment and also start looking into, okay, what are some of the data where we already have for the data gap, but also start to collect some. So a good way to see it as well is that it's also good to do both, because if you do everything as one step at a time, you might end up being a bit behind, because getting all this data, having all of these processes in place, identifying the risks and building the controls can take a lot of time. And we already, at least for some, need to start reporting this year and also a lot more from next year. So starting to have the foundation that you can build upon is going to be very important.
Very much agree.
So now it's also time to see a practical example of how you can actually collect and treat your sustainability data for an assurance process. For example, by using software like Impero to embed these robust processes in your organization. I will show from a respondent point of view, so we will seeing it from the perspective of getting a task to actually fill out data for an environmental report that can go through a limited audit process. The example that I'm going to show is from a group perspective with multiple entities, but it can also work with less, as it is the process itself that is going to be the important part to go through the limited assurance, as it's what the auditors are looking for. So we can have our audit trail, and we know that we have identified or at least mitigated some of the potential risks as well along the way. It's also important to say that the control I'm going to show is also built on the science-based targets commitments and also greenhouse gas protocols also. So there is some alignment between some of the regulations and standards out there. So where I will start is actually in my inbox, because I'm going to fill out this control along with all of you. So I've been getting a control here where I can see straight away I've been assigned to complete the following control. For this, it is going to be the environmental reporting, and this is going to be from Impero, Sweden. When I click the link, I will go directly into the platform, and then I'll be met with actually the task that I have been assigned. In this case here, from the get-go, we get a bit of background information. As Henrik also said, it's very important to have your entire organization with you. So you don't just want to send out a control or task like this to someone that you haven't talked to, because then all of a sudden you'll be, holy, what is it that I'm actually being asked to do? But we can give a short, brief information about what it is that we want to do and how we're going to do it. So in this case, dear Impero Sweden, to ensure a complete data collection in Impero platform, we kindly request that you upload the template for baseline FY22 along with your background data. So attached here is as well the updated Impero Group Environmental Data Collection Manual, because we need to ensure that the processes that we have built are also being enforced. And the same goes with an Excel file, in this case, to report all the data that we will need to go through this audit process. So straight off the bat, we are being asked, please attach the filled out environmental data template here. The data template is provided as you can download and fill out all the data. The same goes with the manual for how you actually need to work with this data. As Henrik also mentioned, this is not data that you start collecting right now. It is data that you have already collected in different systems, especially, as I will also show in the example, we have some electricity data, we have some data regarding heating as well, but we all have that in different systems all across our organization. But we need to make sure that we, for the audit process, have everything in the same place and make sure the data quality as well for our audit trail. So first of all, we are asked to upload the filled out Excel sheet here, which I'm going to do in order to perform the control. This is just an example. Well, we'll fill in some dummy data in this case. The next thing is that you're being asked, and now we're talking a bit about the quality perspective of the data. Is your environmental data template prepared according to the manual? In the best and ideal scenario, we'll always be able to see, yes, we filled out according to the manual, but as we all know, some deviations might be found to the manual. If so, a common field will pop up that will please provide accurate description regarding the deviations from the manual. So we actually then as well can have the, if we can't report on it, we can at least explain why some deviation happened and what it is that we then can do. The next thing that we will need to do in this case is that, did we remember to fill out all the required boxes in our data template? So it is very important that all the data is updated and completed in this template, as it is a requirement for the audit. So we need to make sure that we have all the information available. So did we fill out our environmental data template? Yes, we did. Did we put in the process log for each reported data point? Yes, we did. The same goes with, do we have a site list of all operational control? This could also be a share of property if we have a 50-50 share with others. But the keyword here is as well operational control. And as we just talked about with the double materiality assessment, when we're looking into doing our IRO assessment, so for example, for our impact and also our financial materiality, our operational control lays the boundaries for where we can also say that this sustainability matter actually lies within our own operation. And we need to take that into consideration when we are then doing our double materiality assessment. And then also again ties into what it is that we need to provide in order for this environmental data to go through the audit process. Lastly, as well, also site lists with number of month with actual data. This is data that we have been collecting throughout the whole year. So it's also very much important that we have all the month with actual data, and that data is then also accurate. The next thing we are going to be asked to do in this control is the background data complete? So for this, since it is very important, of course, to attach the data for the data submission, since in this specific example, the sustainability data is publicly disclosed and are audited, and therefore it requires a certain level of quality. So is the provided background data, to the best of our knowledge, complete for all areas, all locations, and all periods? Again, in the ideal scenario, we would like to say yes, sometimes no, but then again, a pop-up will come. Please elaborate what is missing in the background materials and for which area. Again, we want to have the most complete data without biases as much as possible.
And just what this does obviously is support you with documenting the process, how you've been through the process and arrived at what you arrived at, because here you have a support saying, okay, we did not have complete data. Yeah. That is going to be an issue very often, I suspect, with CSRD.
Yes.
But you at least show here that we know, yes, we thought about it, and so we have done as much as we could reasonably be expected to do to gather the data.
Exactly. Then we are being asked as well for, since it is for a group perspective pushed out to entities, and this is a standardized control that can be shipped out to multiple entities, can also be used nationally if wanted to, since the principles are the same. But since this is for Sweden, we would also like to have attached documentation for the list showing all of these locations with our operations, branches, offices, distribution centers, and also all the inventories. Along with that, addresses and unique IDs also need to be stated, as again, we need to have all the data available and have it disaggregated down so we can ensure the quality in everything that we do. The next thing we are going to be asked in this is actually to confirm all the background materials for all of the environmental data that we're doing for this report. So we're basically being asked here for all the background materials, both for, in this case, we are collecting data for electricity, for heating and energy consumption, transport, owned and leased fleet, both for people and goods. And the reason why we need all of this background materials in this case is all the standards and regulations used in order to actually collect and also ensure the quality of the data. But as we also could see from some of these environmental data when looking into, for example, transport, and why for transport it can be a bit more important, is that this is a mix match of a lot of different kind of scopes. For example, when we're looking at transport, if we are looking at owned fleet and we look at our own vehicles that we have, if it is conventional vehicles using conventional fuels, we, for example, have our scope 1. If it is electric cars, then it is a scope 2 emission. And if it's a leased, then it's actually a scope 3 emission. So we need to be sure that we can disaggregate all data down so we actually take out all the biases in these cases. We are also being asked for outsourced transport for our business travel along with our transport. It's the same mismatch. It can be a mismatch of all our 3 different scopes, because if we again own fleet using cars, company cars, scope 1, electric cars 2, business travels, for example, do you take the plane, the bus, or the train, then it's a scope 3. So again, we need to make sure that we have all of this for our reporting, since we also need to report on this also for CSRD, but also since this is something that we can actually already start collecting now. Then we also have the background materials for waste and also for water. Again, it's very important that we have all the different background information for all of these environmental factors, even though that we might have it in the same Excel sheet, which we actually also state that it can be that several areas are within the same file. It is very good to then upload it still within the individual, since that we will need to have this disaggregation of data. Then lastly, we have two different questions in the end. One here is, do we actually use or have green electricity contracts? This is important as in part of all or some of our electricity supply through a renewable electricity agreement. If we can say, yes, part of our electricity is supplied through renewable energy agreements, then we will actually need to be very precise about how much of the energy consumed in kilowatt hours actually comes from renewable sources. And we also need to be very good at documenting that we have these contracts in place, since, for example, if we draw a parallel to CSRD, if we look into our ESRS E1 in our 5, so E1 5, it is our energy consumption and mix. We'll need to actually illustrate quite thoroughly all aggregation of what kind of sources of energy that we're using, being it conventional, renewable energy, even nuclear, what it is, but we are required to do so also for CSRD. So,
can I just add?
yes,
It's probably a good idea to make sure that what you're reporting in terms of for example, electricity consumption can be supported by the costs. So that if at somewhere you're reporting cost of electricity, and the two should tie in probably, or someone is going to be asking questions.
Yes, exactly. So again, it's very much a holistic process. We need to make sure that everything ties in, so there is no questions, because we would like to avoid getting some might would say suspicious questions into how did we actually figure this out, or how did we collect the data, and how did we handle the data. So again, we want to, in this case, ensure that we have a complete audit trail with everything that we do, so the audit process can be as smooth as possible for these matters. The last question is biofuel part of the reporting data? Again, if we say yes, we have biofuel, then it's also important, please provide the emission factor for the biofuel, including documentation for the factor. When since we are adhering to the greenhouse gas protocol, we need to make sure that everything that we're doing when we're calculating with all of our fuels, we have the right emission factor, since some of these emission factors can actually also change based on location and nations. So again, it is important that we have all the available information and take out the biases. Lastly, we'll be asked to, if we had a general comment, in case that we feel the need to comment on anything, we can put it here, and we can just say, just for this case, that it was very good. And then we can press submit. When I have filled out all of the documentation needed, just to be sure that everything is actually in order. As you also can see that if you forget to upload some of the documentation, you're being asked to do so just to make sure. And for some reason, let's do it like this. It actually, yes. Lastly, you can leave a comment to the reviewer, because we always have a reviewer on to make sure that it's not my bias as the performer, and that's going to have a hindrance in this process. So if we have a comment for the reviewer, we can leave it. If not, we can press submit, and then we are a success. And then we had done our environmental reporting for this. So now it's time for Henrik and I to answer some of the questions that we have been getting from you guys. And I have a question here. One question. Can you give some thoughts regarding the initial ambition level for including stakeholders and granularity of the ESRS topics?
Yeah, that's you always say that, I guess, but it is actually a very good question, and this goes both for these specific topics, but generally, I think discussions on the ambition level are ongoing. Mm-hmm. I think you have to take into account the size of your company, mm-hmm. the size of your sustainability operation and finance operation. I think auditors and other stakeholders will be looking at, and I know this is a bit of a vague answer, but it is difficult to give a very specific answer to this question, but they will be looking at whether the company has can we say, gone through a reasonable effort to collect the data, and to talk to engage with stakeholders? Do you have to talk to all your employees? No, you don't. Do you have to talk to all your suppliers? No, you don't. But if you have very important suppliers that are sort of the bulk of your supply chain, you would probably talk to them. You probably identify the most important ones, and you would try. One question I've gotten a few times: what if we ask and we don't get an answer? What if we don't get a reply? Exactly. Well, again, I think if you have exerted a reasonable effort, if you've tried, if you've sent them into your supplier an email, you may have called them, you may have sent another email, they don't answer, you cannot force them. Nope. And you are not held accountable. But you have to go through a reasonable effort. Yeah. And I would document this. I would have a log. I would have a process log here saying, who have I talked to? What have I done? So I can show and demonstrate what we've done, what the process has been through.
And also in particular circumstances like this, the use of proxies are also sometimes used, because again, we need to go to the length within that we actually can control to make sure that we have looked into this matter from multiple sides, and then we can actually then go further.
Yes.
Another question, do you have any observations of the sustainability topics assessed to be materials to banks? Of course, this also depends on geographical and context information, but must be some similarities within this sector.
The honest question is no, not at this time. I haven't, at least not off the top of my head, that I can recollect. But obviously, I'm assuming the question means that the sort of the banking connection to the company. What is looking at the bank as a stakeholder? What do they consider important?
Yeah, and the same goes for with geographical location they're from, because we also do know there are different regulations nationally. So, for example, if we look from Denmark, and if we look at somewhere in the US, something like that. But it is also a very good question, since we also do know that there's going to be some of these sector-specific standards. They are not coming now. For CSRD is coming in 2026. It has been improved now that it's going to be there from EFRAG. But maybe one last question as well here. How can companies set up resources and build up skills between sustainability and finance teams? What are the roles that are needed, and what would you recommend?
Another excellent question, I think, and something that many companies are working on at the moment is figuring out who owns CSRD. And I think in practice we're seeing very often a co-ownership, and I think we're seeing probably that it's moving from being just a sustainability matter to becoming increasingly a finance matter, and that as we are moving into data collection and we're moving into reporting, we are moving into what is traditionally finance territory and requires finance skills. And today we've discussed internal control, traditional sort of finance topic. So I think the reporting process we are seeing mostly being owned and driven out of finance, but requiring significant input and very close collaboration with sustainability professionals. And I think what I would do is I would view this as a project. I would set up a sort of a group where finance, a steering group where finance and sustainability can meet and discuss issues and ensure progress.
That was it for today. Thank you all that participated. Hope you got some inspiration that you can take with you to your own organization and start treating your sustainability data as financial data. We're always open to have the conversation going. From what it is that we went through today is as well just a small part of the overall agenda with all the process and work that we have to do with ESG. And thank you, and have a great day.
Thank you.